Hello listeners, this week as expected, markets moved in a range of around 300 points. The markets were unable to move above 19,800 levels and also protected the 19,400 levels on the downside. In this week, markets were spooked by the rising US bond yields, which were partially offset by lower crude oil prices. The RBI monetary policy also was in line with expectations, with the central bank looking vigilant on the inflation front. As we enter the next week, there is a lot of action which is likely to give direction to markets from a short to medium term. On Monday, markets would react to the US non-farm payrolls data, and any softening in the US labor market would help the risk-on sentiment in the market. Next week, we also have the US CPI and the Indian consumer price inflation data, which would also help in deciding the direction of the market. The all-important corporate earnings season is set to kick off in the next week. Our sense is that with markets trading above our comfort on the valuation front, any negative surprises on the corporate earnings front would not be taken lightly by markets. Market participants would also look for the guidance and the outlook for the second half of the year by companies, especially those operating on the export side. The IT companies, the heavyweights like TCS, Infosys, HCL Tech, are all scheduled to report their results next week. We believe that any neutral to mildly negative commentaries by these companies would be absorbed by market and would not result into a sharp negative reaction to their prices, as most of the grim outlook seems to be already priced in. So we can expect a lot of volatility next week. We would still advise investors to wait for a decisive move on either side before taking aggressive long or short positions. We continue to remain positive as indicated in our earlier videos as well on CMS Infosystems, Colgate Palmolive and Oil India. So that's all from my side, listeners. Thank you.